Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the impact of Donald Trump's tariffs against Russia. Now, you might be sitting there quite rightly thinking, hang on a minute, I didn't see Russia on that board that Donald Trump was holding up outside the White House. He didn't say he was going to apply a 145% tariff against all Russian imports. He said that about Chinese imports, but he never mentioned anything about Russia. And of course, the reason why Russia wasn't on that list is because it's currently facing the most significant financial sanctions that have ever been applied against any country in the history of the world. So I don't think Donald Trump needs to think about applying more tariffs because you can't actually do any trade with Russia. Virtually everything has been banned. So you might be sitting there thinking, well, what does the impact of those tariffs have on the Russian economy? Well, it does have a massive impact because what's been happening over the course of the past couple of weeks since Donald Trump came out and said that he was going to tariff every country in the world is that we've seen a lot of uncertainty. We've seen markets starting to get very volatile and very panicky. And what we've seen is the oil price falling. We've seen global markets being concerned that we could be moving into a period of global recession. And when that happens, demand for oil falls. And so the futures market starts to build that in. So oil traders have been seeing sell offs. They've been seeing the oil price coming down. Of course, that has a huge impact on Russia because Russia derives around 30% of all of its federal revenue directly from oil sales. So if the price of oil goes down, then that's going to have a really detrimental impact onto the amount of money that Russia is earning and therefore the Russian economy. Now, just before we go on any further today, I want to talk to you about Incogni, who I've partnered with for today's video. One of the things that drives me absolutely insane is spam marketing, whether it be text messages or emails or my pet hate, phone calls. People phoning you up to have a chat and to try to sell you something. And the reason why you're getting more and more spam marketing is because of data brokers. Data brokers can take your personal information and sell it on the internet. But the problem that you've got is that how do you stop those data brokers from doing that? Well, you can actually contact each individual one of them and try to get them to take you off their database. But who's got the time to be able to do that? Well, the answer to that is Incogni. Once you sign up with Incogni, they will contact all of the data brokers and have your data removed, and they will also protect you from cybercrime and identity theft. And the great news is that you can get a 60% discount off an annual plan, which is what I use, by going to incogni.com/Joe Blogs or clicking in the link in the description below. This chart shows the movement in the price of Brent crude oil over the past 5 years. And the reason I want to go back 5 years is just to show the impact of Russia's invasion of Ukraine on oil prices. The invasion started at the end of February 2022. And you can see that oil prices around that time jumped significantly. And they actually hit a peak of around $120 per barrel, which was actually more than double the price that oil had been trading at the end of 2021. So on paper, that actually represented potential good news for Russia as one of the world's largest exporters of oil. However, as you can see, that elevated price didn't last for long. And during the rest of 2022, oil prices did come back down, but they didn't go back down to the same level that they were at the end of 2021. We've then seen oil prices moving around over the course of the last couple of years between around $70 and $90. But if we zoom in and have a look at what's been happening over the course of the last few months, you can see that when Donald Trump took over as president, oil prices were sitting at around $82 per barrel. However, over the last 3 months, there has been a significant downward movement in oil prices. And recently, they were trading as low as $63. So that represents a significant fall in a short space of time. And as I mentioned at the start of today's video, the reason why this is important when we're looking at the Russian economy is because Russia is still dependent on oil for the vast majority of its income and therefore its cash in order to keep funding the war in Ukraine, but also to keep paying for all of the Russian necessities. Now, the charts that we've just looked at are for the price of Brent crude oil, but obviously Russia doesn't produce Brent crude oil. It produces its own version called Urals. And this chart shows the quarterly movement in the price of Urals oil dating back to 2021. And you can see that at that time, Russian oil was selling for around $53 per barrel. Now, interestingly, the invasion of Ukraine, which took place at the end of February 2022, had a beneficial impact on the price that Russia was selling its oil. And you might be thinking, well, that's not what you told us at the time, because you said that Russian oil was trading at a significant discount. And we'll go on to look at the difference between the price of Brent crude oil and Urals oil in a moment. But you can see that the price spiked at around $80 per barrel at the start of 2023. And that was because Russia was able to benefit from the global increase in prices. However, as a result of the global decrease in price that we've just seen that's taken place over the last couple of years, the sales price of Urals oil has been falling. And also, of course, the impact of the financial sanctions has had a negative impact on the price that Russia has been achieving. And if we look at the far right-hand side here, you can see that the most recent data shows that Russian oil is now trading at close to $50 per barrel. So it's basically back to where it was in 2021. However, the volumes now are lower than they were back in those days, because in those days, Russia was selling its oil to everybody. Lots of European countries were buying oil coming through pipelines and also seaborne oil. However, the West has now turned its back on Russia, and so Russia is now struggling to be able to achieve the same volume of oil sales. This chart shows the movement in both the price of Brent crude oil, which is shown by the orange dotted line, and Urals Russian oil, which is shown by the blue line, dating back to 2021. And what you can see here is that throughout this period, there has been a clear differential in terms of the price that Brent crude oil sells at versus Russian oil. Russian oil sells at a discount to Brent crude oil. And you can see that following the invasion of Ukraine, that discount actually widened significantly. And at the start of 2023, Russia was achieving $80 per barrel, but that was at the time when Brent crude oil was selling for around $105. So at that point, there was a $25 differential between the two types of oil. And the reason for that, obviously, was because a lot of the West had decided that it no longer wanted to buy Russian oil. So Russia was having to offer a larger discount to encourage countries like China and India to take larger volumes to offset the volumes that it had lost selling into the West. But you can see that the differential has been maintained throughout this period. And the reason why Russian oil prices have been falling over the last couple of years is because the general oil price has been going down. So every time a barrel of Brent crude oil sells at a lower price, it forces down the price of Russian oil and therefore reduces the amount of revenue that Russia is earning. So this is why Donald Trump's latest tariffs and the impact that they've had on the global economy are having a seriously negative impact on the Russian economy, because every time the price of a barrel of oil falls by $1, Russia loses a hell of a lot of money. And this chart plots the impact of the drop in Russian oil prices compared to the loss of revenue for the Russian economy. The dotted blue line here shows Russia's total export revenue loss, so that's basically the gross value of all of the oil sales, and the red line shows the loss of government revenue, because the Russian government takes around 1/3 of all of the gross revenue proceeds from oil sales. Now, the scale on the left-hand side of this chart is shown in billions of US dollars per year. And across the bottom here, we've got the drop in Russian oil price per barrel, which starts at 0 on the left and goes up to $20 on the right. Now, in 2024, Russia was exporting around 6 million barrels of oil per day, which on an annualized basis equates to around 2.2 billion barrels in total. So for every $1 that Russian oil falls in price, it has a serious impact. Russia is losing $2.2 billion worth of revenue, and the Russian government is losing 1/3 of that. So you can see here, when we look at the blue line, that if the price of Russian oil was to fall by $10 per barrel, that would have a $22 billion impact over the course of 12 months in terms of gross revenue. And from the government's point of view, it would be losing around $7.5 billion worth of government revenue. Now, if we jump back to the chart that we've just looked at, showing the movement in the price of Urals oil, you can see that since the start of 2023, when Urals oil was trading at $80 per barrel, Russian oil has fallen by $30 per barrel. So if we go back to this chart, we only go up to 20 on this, but a $20 movement equates to $45 billion of lost revenue for Russia across the board. So that's Russian companies. And that means that the Russian government is losing around $13 billion of direct income. So the current movement in oil prices that we're seeing as a result of Donald Trump's tariffs, we're seeing this global downward trend in oil prices, is having a hugely negative impact on both Russian companies, but more importantly, the Russian government and the Russian economy. Okay, in terms of putting some more detail onto those figures, this chart shows the breakdown of the Russian federal budget from 2021 to 2024. You can see on the left-hand side here, I've shown the percentage of the budget that was derived from oil and gas revenue. So in 2021, which was before the invasion of Ukraine started, Russia earned 36% of all of its revenue directly from oil and gas sales. Now, interestingly, in 2022, that percentage actually increased to 45%. And of course, that was because the price of oil and gas spiked. So Russia benefited from that increase in price. And also, it took a while for European countries to find alternative supplies. So in that initial 6-month period, Europe was still buying lots of oil and gas that was being fed directly to it through pipelines because it was impossible for those countries to actually change overnight. So this represented a real boost for the Russian economy. So that was a record-breaking year. Now in 2023, as the European countries started to find alternative supplies and turned their back on Russia, the percentage crashed to 28%, which was actually significantly below where it was in 2021 at 36%. Now in 2024, interestingly, it's increased to 31%, and that's because Russia is now finding more established markets. It's selling a lot more to India on a regular basis. It's also putting into place more pipelines with China and selling more volume into them. And if we look at the actual numbers here, you can see that in 2021, Russia earned 9 trillion Russian rubles, which at that time, because of the exchange rate, equated to 123 billion US dollars. In 2022, the figure increased to 12.6 trillion Russian rubles, which was an all-time high. And because of the exchange rate, that equated to 185 billion US dollars. Now, interestingly, in 2023, we saw a fall in the amount of revenue from oil and gas. Now, at that time, the gas supplies had been completely switched off to Europe, so there was a major reduction in gas revenues, and also there was a lot of problems with regards to oil because the sanctions were being ramped up by the West, and the revenue fell to 7.3 trillion Russian rubles, which is the lowest out of all 4 years here. And because of the exchange rate, we saw a crash in the value of the ruble. That actually reduced the total revenue in US dollar terms to 97 billion. So you can see that that's basically half of what Russia earned in 2022 in US dollar terms. And in 2024, the revenue in terms of rubles was 8.7 trillion, which equated to 96 billion US dollars. So less than it was in 2023. So interestingly, even though the percentage was higher at 31%, the actual income in US dollar terms was significantly lower because of what was happening with the exchange rate. And we've talked a lot about the movements in the ruble, if you follow the channel. Now, clearly one of the biggest issues when you're putting together the budget for the Russian economy is what's going to be the price of oil, because when it's equating to around 30% of all of your total revenue, getting the price of oil right in your budget is really important. And this chart shows the budgeted versus the actual price of Russian oil between 2021 and 2024, and also the forecast level for 2025. So back in 2021 and 2022, Russia was taking a conservative view and it was budgeting a price of around $44 per barrel. Now, interestingly, in 21, the actual amount came in at $69. And then in 2022, because of all of those factors we've just discussed, it actually achieved $76. So hugely above the $44 budgeted figure. So 2022 overall was actually quite a good year from Russia's perspective. Now, in 2023, because they'd achieved $76 in 2022, the Russian authorities set a budgeted level of $70 per barrel. However, the actual price came in at $52. Now, that was because of the impact of the financial sanctions, and also, as we saw, the general price of oil drifted down, so that pushed down the price of Russian oil as well. Now, interestingly, in 2024, despite the fact that Russia had only achieved $52 on average in 23, they set the budgeted level again at $70. And as you can see here, the actual amount achieved was only $62. So again, significantly below the $70 that had been set. Now for 2025, perversely, the figure's been set at just under $70 again. So it's been at $70 for the past 3 years, despite the fact that in 23 and 24, the actual level came in significantly lower. And as we saw from the data earlier, the current price of Urals oil is trading at around $50. So that's the lowest out of all of the years shown on this table. And if it does come in at 50, clearly that is significantly less than the $70 that have been budgeted. And if the sales price of Russian oil does remain at $50, this is the impact that it will have on the 2025 revenue figures. So you can see that the estimated revenue for oil and gas would be 6.75 trillion Russian rubles, which is significantly less than all the other years on this chart and is almost half of what it was in 2022. And that equates to 73 billion US dollars, which once again is a lot less than Russia has earned on every other year. And if that does happen, then it would only provide around 25% of the budget for the whole of this year. And this chart shows the potential impact of that on the Russian economy. So what you can see here is the actual federal budget balance in each year between 2021 and forecasted for 2025. So you can see that before the war in Ukraine started, Russia actually had a surplus in terms of its federal budget. It's above the zero line that you can see towards the top of this chart. However, that surplus turned into a deficit of 2.3% in 2022. They managed to reduce that to 1.9% in 23 and 1.8% in 2024. However, it was still a deficit, so it was still running lower than it was expected to. And if the oil price remains at $50 per barrel for Russian oil, it would come in at a budget deficit of 3%, which would be the worst performance that Russia has seen in any of the last 5 years. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking a lot about Donald Trump and his global tariffs and the impact of that on the global economy. And obviously, it's been quite negative in terms of if you start applying tariffs to all of your imports, it's going to increase the price of those products. That's potentially going to push up inflation and could have a really negative impact, not just on the US economy, but on the global economy. And on the flip side of that, we've got lots of other countries who are now concerned about the volume of exports into the USA. That's going to impact on all of those companies. They'll report probably lower profits, therefore they'll pay less tax, and therefore GDP is likely to either grow at a slower rate for those countries, or potentially those countries could find themselves in a recessionary situation. So there are a lot of concerns kicking around at the moment. And as a result of that, we have seen the oil price going down, because the oil price is a really good barometer as to what's happening in the global markets. When things are going really well, oil tends to be in high demand and therefore pushes the price up. And when things aren't going so well, the price tends to go down. And that's what we've seen, particularly over the last 3 months, but also, as you saw, over the last 18 months to 24 months, we've seen oil prices coming down from those elevated levels we saw following Russia's invasion of Ukraine. And all of this is really bad news for Russia because Russia is still hugely dependent on oil. It derives around 30% of all of its revenues from oil. And in fact, as we saw from the data, that was over 40% back in 2022. So movements in the price of oil have a huge impact on the amount of money that Russia is pulling in. And a $1 movement is really significant. So the movements that we've seen in the past 3 months, whereby the price of Russian oil has fallen by around $15, is having a massive impact. And what that means from Russia's point of view is that they don't really know what they're going to be able to achieve in terms of those sales prices. Therefore, they don't know how much money they've got coming in, so they can't really work out how much money they can spend. And that's a major problem for any government, not just from Russia's point of view. So I wanted to make this video really just to highlight the fact that what Donald Trump is doing is having an impact on every country in the world, including Russia, despite the fact that they weren't included on that list of reciprocal tariffs that he held up outside the White House. Actually, Russia is probably suffering more than most countries because we're seeing the oil price going down. And what that means is that Russian oil prices are also going down. That means that Russian revenue is going down. Lots of companies in Russia will be suffering as a result of that. And the Russian state is also suffering because it derives the biggest chunk of its income out of all of its different industries from oil and gas. So when oil prices go down, that means that Russia is receiving less revenue. It will have less money to spend. And that's bad news for Russia and the Russian economy. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, really appreciate that. And if you're a long-term supporter, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that support. Really helps keep me motivated. And here's something to put a smile on your face.